Please pay attention that if you like to be a profitable trader, you need to correctly identify trends on the chart. Trend identification is the key element of a successful trading strategy. On TradingView platform, there are many indicators that can help you with trend identification. Some of them are good and some of them not so good, but in this video, I want to introduce the best and most accurate indicator that just recently published on TradingView platform. Just make sure you watch this video until the end and let's get started. Before I add the indicator, I should mention that the most effective way to identify trends in the market is price action analysis, which you directly work with the price movement rather than relying on indicators. If you're interested to learn price action analysis, recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, to add the amazing indicator to our chart, here we click on indicators and we search commodity trend reactor, this one, which is a new indicator from Big Beluga. Alright, this is the indicator and as you can see it is added to the chart. Later I will add also another indicator and teach you a very accurate trading strategy, so make sure you watch this video until the end. Alright, this indicator is built based on the classic CCI, Commodity Channel Index, which is a very popular indicator among traders. First we go to the settings of the indicator to optimize the settings. Here in the inputs tab for the CCI length, we set it at 200, so the indicator will not be sensitive to short-term fluctuations and so it will better help us with longer-term trend identification. As you can see, we have a line here that is moving above and below these two lines, which are set at 50 and minus 50. In times that this line goes above 50, it is bullish, meaning that we have greater upside momentum in the market. So advancing of the price is more expected to happen in this situation when the line is above 50. And on the other hand, when the line goes below minus 50, this situation is bearish and it means that we have greater downside momentum. So decline of the price is more expected to happen in this situation. We use this indicator for trend identification, not buy sell signal. So we don't take these upper line crossover or lower line crossovers as a buy sell signal, but when the line is above 50, we say that the market is trending up, so we look for long position opportunities, and in times that the line is below minus 50, we say that the market is trending down, and so we look for short position opportunities. Later I will teach you how you can do it, so make sure you watch this video until the end. This information is also reflected on the price chart. Since the time that the line goes above 50, we have a line here below the price and the color is similarly green, and in times that the CCI line goes below 50, like here in this part, here it will not change color until the CCI line completely goes below minus 50, and this is the excellent feature of this indicator because many of the times this is just a pullback within a trend or flat market, so it will not change color and give misleading signals. It remains green color as you can see unless the CCI line goes below minus 50. This line is similar to super trend, which can help us with trend identification. This is a bullish situation, and on the other hand, when the CCI line goes below minus 50, here we have a line above the price and similarly the color is orange, and it's similar to super trend indicator and it will change color only when CCI line goes above 50. As I said, this is a good feature of this indicator because it will not give misleading signals in the pullbacks, and as you can see it remains in orange color unless the CCI line goes above 50. Alright, so as I said, we use this indicator for trend identification. When the line is above the price and the color is orange, it tells us that the market is in a downtrend, so we should look for short position opportunities, and in times that the line is below the price and the color is green, it tells us that the market is in an uptrend, so we should look for long position opportunities. This indicator also provides some signals which are shown here like this and also on the price chart, and they happen when the CCI line goes above 200 or goes below minus 200. These signals can show overbought or oversold conditions, and so reversal of the price is expected to happen after them. Please pay attention that these reversal signals should not be used alone for taking a trading decision, and we need more confirmation before entering any trade. One of the confirmations that you can use is divergence. For example, here you can see that the price made lower low, but here the oscillator made higher low, and this is a bullish divergence telling us that the downside momentum is weakening and the upside momentum is gaining strength. So there is a possibility possibility of reversal, and the indicator is also giving signals that a reversal is probably going to happen. But still, this is not enough, and you can have these types of divergences in the pullbacks, or in other cases the price may go to a trading range after the divergence, like what happened here. You can see that similarly here we had a bullish divergence where the price made lower low, the oscillator made higher low, the indicator is also giving signals, and after this the price just went to a trading range before further declining. So we need more confirmation regarding the reversal. One effective way is using price action analysis. For example, here for this bullish divergence pattern, here you can see that between the two lows we have a swing high, and when this swing high is broken, which is actually the last swing high in this downtrend, when it is broken and the price goes above this level, it shows that the structure of the downtrend is violated, and this could be the starting point of an uptrend. And you can see that here the market turned to an uptrend. Even in this case, you can see that here again the market went to a trading range before completely establishing the uptrend. Alright, now let me teach you a trading strategy, which is actually a trend following strategy by the help of this indicator. Alright, as I said, we use this indicator for trend identification, and then we look for trading opportunities within a trend. For example, here the indicator is telling us that we are in an uptrend, so we should look for long position opportunities. For this purpose, here we click on indicators and we search Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover. Alright, this is the indicator, and as you can see, it's added here below the chart. This is a very powerful trend indicator that can help us to know when the price is advancing, when the price is declining, and when the price is not trending and moving flat. As you can see, we have three lines here: green, red, and orange. When the green line is above the other two, it tells us that the price is advancing. When the red line is above the other two, it tells us that the price is declining. And in times that the orange line is above the other two, it tells us that the price is moving flat. Alright, so when this indicator is green, here in Andean oscillator, we look for the times that the green line crosses above the red line, and then after that crosses above the orange line, like exactly what happened here. We don't take signals like here. Let me show you an example where we can have Andean oscillator green line going below the orange line and then again crossing above the orange line, like what happened here. We don't take them because they can offer more risk. They can provide profitable positions, but to decrease the risk, we only focus on fresh crossings, like what happened here. The green line crossed above the red line and then after that crossed above the orange line. This is the ideal signal that we're looking for. So here we have a confirmed buy signal, and we can enter a long position at this point when this new candle is opened. The stop loss is placed below the previous swing low and the profit target at a risk to reward ratio of 2. Moving back on the chart to show you more examples, you can see that this indicator is still green, so we should look for long position opportunities. Here you can see that the green line crossed above the red line and then after that crossed above the orange line. So we have a confirmed buy signal, and we can enter a long position at this point when this new candle is opened. The stop loss is placed below the previous swing low and the profit target at risk to reward ratio of 2. Alright, to show you a short position setup, here you can see that the indicator is orange, telling us that the market is trending down, so we should look for short position opportunities. In this situation, here in Andean oscillator, when the red line crosses above the green line and then after that crosses above the orange line, it's a confirmed sell signal, and we can enter a short position when the new candle is opened. The stop loss for this trade is placed above the previous swing high and the profit target similarly at risk to reward ratio of 2. Alright, here in this part, as you can see, the market is in a trading range, and because we have large swings of the price, we have repeatedly changing of this indicator from green to orange or from orange to green. Let's see how the strategy performs in this situation. Here you can see that the indicator is green, but in this time period you can see that we didn't have any buy signal. From here the indicator became orange, but here we didn't have any short position signal, as you can see. From here here the indicator became green, and in this period similarly we didn't have any long position signal, and from here the indicator became orange, and here also we didn't have any short position signals. As you can see, this trading strategy also performs very well during the range market, but please pay attention that this doesn't mean that you will not encounter false signals. There is no indicator or trading strategy with 100% win rate. Losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.